Welcome back to NMP Talk Show. I'm your host Neo Marapedi, and today we're talking about finances. We're talking about things that we always have to take care of every single moment of our lives, and to help us navigate uh, this path of navigating our finances or spending our monies. We have Figile Nkosi, who's a financial advisor and a planner, and also is a former co-host of NMP Talk Show. Can you believe it? Now she is back on a different note, sitting on a different seat today as a guest, distinguished guest of our show. Figila, welcome back to NMP Talk Show.
Thank you very much, Neo, my former co-host, for having me as your guest today.
You know, I've been trying to get you back to the show. I had to find another way to get you back to the show. I know you're very busy, so I guess
Yeah,
booking you was the right thing to do, right?
yeah, I guess so.
Figile, a quick one, man. For the benefit of our audience who've never had the experience of listening to you, can you tell us who Figile Nkosi is and what do you do?
So Fiki Lenkosi is a financial planner and advisor, as you said, and my role is to help people understand their money better. I assist them in managing it, protecting it, and making it work for their goals. What I do is different from getting rich quick, those type of scheme, and it's not about making people rich, but it's about making an intentional decision with what you have. And again, it is not only for the rich, but it's for everyone.
Okay, so basically, I'm included there, right? Not for the.
Yes, you are, definitely. No, it's not only for the rich.
That's good. I think we're gonna have the best time of our show today. You just taking me back to the many years that we've had you on the show being a co-host. You've made
Mhm.
us to feel at ease when we're talking to our guests. So I guess I'm at ease today because I know someone who's experiencing this, right?
Yeah, yeah, yeah.
All right. So, File, what inspired you to get into financial advising?
So what inspired me is my background.
Mm,
It played a very significant role in me becoming a financial planner. So I
yes.
grew up in an environment where finances were really discussed within families. Over time I realized that many people, especially with the professionals from similar backgrounds, because I'm not the only one. I think
Mm,
you might be one of the group, where finances are not talked about openly in families. We cannot talk about money, and we struggle at the end of the day to plan our finances. Even with spouses, that's one thing I realized, that a married couple, they find it difficult to have a conversation about finances. So I am here to assist them being able to talk about finances. And yeah.
oh, that's awesome. Well, that was my next question. Who do you usually talk to or assist regarding finances? But I see you already alluded to couples. Do you want to expand on that as well?
It's not only couples. Like I said earlier, that it's not for
Mm,
the rich, it's for everyone. I mean, if
yeah,
you've got finances, I assist you in managing the little or the much that you've got. You
yeah. That's good. No, no, we happy that you're here because yay, things are going up. Eh?
Yeah, and I know that sometimes finances are a very touch and go type of a topic that people want to talk about. It's like talking about your health in front of everyone. You
You-
don't
I,
want to talk about it in front of
I
everyone.
don't think it's even a touch and go. I, for me, it's like a go. It's gone.
Like, yeah, 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 yeah.
Right. So, in simple terms, let's talk about financial planning because
Mm.
this is the important part of it. If you want to control your finances, you need to plan how to use your finance. So,
Mhm.
what would you say is the best planning that one can implement?
So, like
Mm.
simply talking about financial planning,
Yeah, yeah,
I take it as a roadmap for your money. Like
yeah.
it's like a GPS for your money. So
Mm,
a financial plan tells you where your money is
mm.
going or is gonna go, instead of saying, "Oh, where did my money go after that payday?" So in simple terms, it's just a roadmap for your money.
A roadmap.
Mhm.
How many people can read roadmaps, eh? I remember
Hence,
my
I
first,
did say that in the GPS as well, because we know how to how to
I
torment
remember,
the captain.
I remember when I first started working, and I
Mhm.
was giving a map book. We didn't have GPSs that time, so I used the map
Yeah,
book. And then my boss said, "Okay, you need to go to this place. Find it on the map." My word, it took
yeah.
me like 45 minutes to find the place. And now once I found the place, I needed to map it out from where the office is to get to the client, which route to take.
Mhm,
So it took me
mhm,
even
mhm, mhm.
and my boss was like, "No, do you even know how to use the map? Because you should have been at the client at this time already." So
Yeah, yeah.
is with finances as well. Can we read
Yes.
roadmaps of finances?
Mhm,
Because if we can do, I, I don't think we'll be talking about this topic in this manner.
mhm.
Maybe we'll be
Yeah,
talking about how we can scale down on, being rich.
the map, like reaching where we wanna go. Like here's the map. We know where we wanna go, and you just put it in, and then you go.
Yeah. Okay.
Yeah,
Let's
yeah,
talk
yeah.
about. Maybe tell us the key components, of a solid financial plan. Because
So
I
a
get
solid financial plan.
mm, mm,
Mhm. It starts with one having clear goals. You need to understand what you're working towards in the short term. You're looking at the medium term, and you're looking at the long term. So from there, it's about budgeting, knowing your cash flow management, making sure your income supports your lifestyle and your saving goals. And it also includes building an emergency fund, like managing your debts as well, and making sure that you manage your debt smartly, and
mm.
protecting yourself from using, like through using the right insurances. And then again, another component is investing. Um, People want to grow their money in a way that matches their risk tolerance and their life stages. Whether you're still single, you're married, you're starting a family, you are an old person going towards retirement. And
Mm.
finally, a good plan takes you to the retirement and the legacy planning into account. So you're not just planning for today, but you are planning for the long term security as well.
That is solid, eh? I must say. Why are we struggling financially? I mean, if
Uh, uh,
we have those key points, these
mhm.
key components of a very solid plan, why are we struggling so much?
One thing I realize is that most people do struggle financially because
Mm,
it's not because they are earning too little. It's only an excuse, a valid excuse to say, I'm not making enough money, but because they don't have a plan in place, and we're not taught how to manage finances. Like I said, our background may be that finances were never discussed at home. So if you don't know how to manage your finances, and you do not have a plan, that's one struggle that they face. And like growing up without an open conversation about finances often leads to poor budgeting, to acquiring more debts, and to not having an emergency fund, which is forever a need if one person is working, maybe, let me put it that way. And then another thing is that there's added pressure, like the rising of the cost of living, having to support our extended families, and the lifestyle inflation and the social expectations, it makes it harder to cope, especially for professionals. When I'm working, I want to be seen. I want to be seen driving that big car. I want to be seen staying in that mansion because I'm earning an income. So those pressures, they cause a struggle in in finances. And then on top of that, people find financial planning overwhelming, and because of that, they do not even want to talk about financial planning, let alone having a financial plan in place. And lastly, especially with married couples, there's poor communication, which leads to like having an isolated decision making, and that causes unnecessary stress. With the right guidance and open conversation, many of these challenges can be manageable.
You're highlighting very important points there. Um, in fact, I picked up two
Mhm,
couples not talking, about finances, planning around,
mhm.
what they how they're going to use their finances together. And then
Yes.
secondly, a showy display, like to show
Mhm.
off, how much you have.
Yeah.
We had
Mhm,
a show last week on 2 weeks ago,
mhm.
also regarding the finances. I think you even saw it, and one
Yeah,
of the
yeah.
things that was highlighted, you also highlighting on it, because it is the main problem here,
Mhm.
that we we live beyond our means. Or
Yes.
whenever we have a raise, we want to match up with the pay raise, so
Mhm.
people can see that we earning more, and that
Yes.
really causes tensions
Yeah,
with our
the more
finance.
you earn, actually, the more you earn, the more expenses come in as well, because you increase, like if I was driving my i10 and now I'm earning a good money, I want to
Yeah.
change that i10. People must see that I'm earning good money now, but I do that without having a solid plan in place, and
Mm.
that will be a cause of a struggle when it comes to your finances.
But really, isn't that the main purpose of anymore? That people
Uh, uh,
must see that you're now earning a little bit better, and hence you can drive a better car.
Well, a car won't show that, according to me, basically. I cannot say, I'm not talking about individuals, but what I have seen,
Yeah.
I think it means, to me, it will mean that the banks, so that you can afford, you know. It's not that the banks knows that you will be able to pay that monthly installment of 20,000 rand a month,
Mm,
but with that higher income, you can
mm,
afford. Like we said previously, we spoke about having a plan in place. If you don't have a plan in place, we've
yeah.
got extended families, and if the extended families see the cars that we're driving, it's easier for them to come in and say, "Hey, I need to go to a doctor." Previously, they will go to a public clinic, but now they want to see a doctor, and they don't have the money to see a doctor, and they come
Mm,
and ask for that 500, 1,000 rand that you have to take out of pocket, and you haven't planned for that money. It has to go to that car that you took out on an installment, and that will become a challenge. So it's not a bad thing to drive that big car to stay in that mansion, but if you've
mm.
got a proper plan on whether you can be able to afford, we'll discuss this probably at a later stage as to how do you have to look at affording your lifestyle.
So this is a mindset kind of thing. This
It
is what
is
we're talking
definitely.
about, mindset, right?
Yes.
But
Yes.
how much does mindset play a role here?
So mindset, they play a huge role,
Mm,
when it comes to this. How people think about money often determines how they behave with it. So
mm,
if someone believes money is stressful, it's complicated, or it's something to avoid, they are more likely to ignore the planning, and they are more likely to overspend or delay the important decision. So on the other hand, a growth mindset, being open to learning, being open to planning and making the small changes that you might need to do usually leads to a better habit over time.
Sure. Man, oh. I don't know what to say about that. I think that's
But
main,
let me leave you with this one when it
yeah,
comes to the mindset is that
yeah,
an income can change, you know,
yeah.
but the mindset is what drives consistency. It's what
That,
drives the discipline and the
that's the
long-term
problem
success.
there. You see, that's the problem. Uh,
Yeah.
Does it take long for someone to adjust their mindset? Um, when you think about people who are wealthy,
Hmm.
it's not that because they are wealthy now because they've changed, their mindset. It's something that
Yeah.
they've
Yeah.
come with from a long time ago.
Very long
Now,
time. Yes.
now you're talking about somebody who doesn't have money, you know,
Hmm.
um, all they aspire to is being rich. And
Hmm.
when we're talking about wealth, it's more than the rich.
Hmm. Hmm.
So how do you help somebody like myself who has never been rich and who wants to aspire to become rich, to change a mindset of what they have learned from long ago to the mindset that will help them get to the goal?
They need to unlearn what didn't work, and that alone is a process, you know. But I always believe it's consistency. You know, if you
Mm,
told yourself, if you set out your goals and you've got a plan in place and you are consistent with your plan, it doesn't mean that you won't fall off from the plan that you may have.
mm,
But at least if you are consistent with the little that you may have, and you
mm,
start there, being
mm,
consistent. When the income increases or you've got your rough money coming in,
yeah,
because you
yeah.
now know how to spend it, you know, you will be able to be consistent, taking it from the small that where you started, and then now you've got too much, and then you can use that
Mm.
in a very in the right way.
Okay, all right. So this is a follow-up question to my statement there.
Yeah.
For someone
Hmm.
who's struggling, who's trying to change, you can feel overwhelmed, because now you want to change your ways, you want to unlearn what you've learned before that has not been working. Where should we start? Where should I start if I want to do that, if I want to change?
With that, you need to start by having a plan. And that's where
Yes.
you start
Mhm.
hiring me. You know, you
Okay.
have to hire because I will hold you accountable with whatever we have discussed. But if you say
That's the key
you
then.
need to have somebody, yes, you need to have to, you must have somebody who will hold you accountable. You know,
Accountable.
not to in a punishing way, but in
Mm,
a way that, listen, this is where you want to go. Remember, and this is what you have. And for
mm,
you to get to where you want to be, this is the road that we need to take, that
mm,
roadmap. Now we're
mm.
using it to reach the goals. If you take a wrong turn, I will be able to bring you back to saying, no, 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 that's the wrong turn. Come back, let's go back. And then we take the route that we wanted to take
So
from
are
the
you saying
go.
you're going to have access to my account?
Now, I don't have access to your account,
But how
but
then
if
would you see that I'm spending my money?
I ask you, and you need to be honest with yourself. Like you know, with financial planning, it's
Yeah.
like going to a doctor. You know,
Uh-huh. Mm,
you sick, for an example. You
mm,
go to the doctor. You tell the doctor. If you tell the doctor half of what you are experiencing, and the doctor will only heal the half that you told them, because they don't
mm,
know. So if you are
mm,
honest when you're going to the doctor, you are able to get the right medication to treat whatever condition you have. So take the same application to financial planning. If
yeah.
because I'm not going to get to your bank account, but we
Okay.
will have a conversation. The minute you start lying to me about how you spend your finances, You are
Yeah.
not killing me, but you're killing yourself. So it's pointless even hiring me to assist you in managing your finances because you are not honest with me. You might as well live it. But no, I'm not saying live it.
Okay. No, I get you. I get
Yes.
you. Yeah,
Mhm,
maybe it's one of the things that gets us scared of getting somebody like yourself.
mhm.
Because finances are very personal. The
Yes.
the moment the moment you open it up, you have to be trusting that person.
Yes.
So I get somebody, I get a telephone directory. I see your name, Fikile Nkosi, a financial advisor and a planner.
Mhm,
I give you a
mhm.
call. Fikile, you know what? I need somebody to help me with my finances. But now I'm not. I don't know you, and maybe
Definitely.
that's the hurdle that most of us, have to cross because we're not knowing you. We're not able to approach you or actually to be open with you about my financial status and how you can assist me. I guess that's what's holding back.
I do get what you're saying. Like, it's
Mm,
not really easy to discuss the finances with somebody you don't know and somebody you
yeah,
don't trust. So you need
mm,
to build a relationship with the person that you want to hire as your advisor or your planner. And
mm,
one thing that you need to remember is that financial planning is not a once-off consultation. It's
mm,
an ongoing process. Like for the rest of your life, you need to have a financial planner, who will be able to assist you, and then who you'll feel comfortable. So if we're not comfortable on the first meeting when we're meeting, I think
yeah.
it's not a good idea for you to hire me.
Okay. So it's not a good marriage here. A
No, no,
prospect
it's
of
not a good
marriage.
marriage. If you click, I mean, it's pointless because you won't feel comfortable. What you need to know is that you need
Yeah.
to feel comfortable with the person you hired,
Mm,
so that you can be able to open up and speak openly with that person with whatever troubles you. And
okay.
another mistake that we do is I want to hire a planner or an advisor when things are already bad, like when I'm already indebted.
Obviously.
No, and so I said, you don't need to come to me when things are very bad. Yes, you can, because obviously I
Mm,
need to assist you. But when you're thinking of a financial planner or a financial advisor, don't think about them when it's already late. Think about them when you start working, or if you're studying, think about them on your final year and start building
mm.
that relationship while you still don't have money, and they will assist you in avoiding a lot of mistakes that most professionals or most people who are working make.
Two things, Fikile.
Mhm.
You
Yes.
saying it's better to come to you before you start spending, when you're still at school, when you start working, right? Now we're
Yes.
talking about the people that are struggling already and that need to come out of that struggle. And that's why we still want to come to you to help. But now our salaries, our income already feels too small that we can even start saving.
Mhm,
We have debts after debts over debts, right?
mhm, mhm.
So if I'm that case study, what do I need to do? Do I need to
Yes.
start paying my debt first before I start saving money, or save money, pay later? What do I do? Where do I get the balance?
One thing, the first thing that I will have to say is that
Mm,
it's not that all debts are bad debts.
mm, mm,
There's good debts and there's bad debts. The
mm,
good, the one thing you have to ask yourself is, why am I taking that debt, and what's the reason I need to use it for? Like if I want to buy a house, or I want to invest in myself through education, or I want to open an investment, like I want to open a business, as an investment. That's good debt. You can go and borrow money. But
mm,
if you want to maintain your lifestyle, That's the bad debt. So that's the first thing that you need to look at.
Okay.
Which debt do you have? Now,
Mm,
if you're already indebted, like you have asked, we need to start with the budgeting now. How much
mm,
are you paying towards your debt? And there's this rule, if you were to come to me before you are indebted, there's
mm,
this rule that I like using. It's a 50-30-20 rule. So
mm,
50% of your income must go to your needs. And that's where you need to know. You need to differentiate between needs and wants.
months.
Now, the 50% needs to go to your basic needs. That will be your rent, that will be your transportation, that will be your food, and
Mm,
it should be your insurance. People view insurance as an expense. So the 50% should be going to your basic needs, and insurance is one of them. That we can discuss when you come and see me as to why I say insurance is the more is your is an investment, not an expense, and it's part of your basic needs. And then the 30% will go to your wants. Your wants, that's where your lifestyle comes in. And your entertainment. Because when I say you must have a plan, people feel like I will say, no, you have to cut off on your entertainment. You have
mm,
to tone down on your lifestyle,
yeah.
unless there's a serious need that will
Mm,
say, no, your lifestyle you cannot afford now. Let's scale it down. That's a different story. But if you are still new, you just started working. This is
mm,
how you have to structure your income that you're earning, whether it's 1,000 rand or it's 100,000. That's how you have to use it. It's 50% to your needs, 30% to your wants, and then that's where the 20% comes in. And that 20% goes to your savings, it goes to your investments. And the investment will be building up your emergency funds, and having those short-term, long-term goals or medium-term goals through investment. You want to buy a house, you want to deposit a house, you can start saving using that 20% to say you want to pay for a deposit, whether it's for a car or a house or whatever the goals may be. That's where the 20% comes in. But now what I often find is that on that 50-30-20 percent rule,
yeah.
if you are to take to use say 40% towards your wants, like maintaining your lifestyle and your
Mm,
entertainment, that means you're stealing between it could be that you're stealing from your needs, that is the
need
50%, or you're stealing from your savings. So
savings.
if you spend more than what you need to spend on, then it is already a trouble. So that's how you need to look at. The 50% must go to your needs, 30% must go to your wants, and the 20% must be towards your savings. I'm not sure if I answered your question. I tend to talk a lot, you
You
know that.
you have answered the question, but you also,
Okay.
have triggered some more questions regarding that.
Yeah. Mhm.
Yes, I get the 50-30-20 principle,
Ye-
and
mhm.
it's a good principle. However, the challenge becomes when somebody already is indebted,
Mhm.
right? That's the first
Mhm.
one. That's the first challenge.
Yeah.
And secondly,
Mhm.
their salary has run so thin that they don't even know where to start. How to now do
Mhm.
the 50-30-20 principle applied in their finances.
Mhm.
So what then would somebody do in that case is that you spoke about insurance. The insurance is an
Mhm.
investment.
Yep.
Guess what? That will be
You
the
cancel
first
it
thing
first.
that will be the first thing that gets cancelled. Insurance. It doesn't matter
I
what
know.
insurance, car insurance, home insurance, whatever. It is
Ever.
the first thing. So
I
that's the
know.
problem.
Hence, I said,
Yeah.
that's the most important part is to
Mm,
have somebody who will hold you accountable. See, if
accountable.
you understand the principle of the 50-20, the 50-30-20 rule,
Mm,
now you will have to sit down and look at what exactly is my 50. what exactly is my 20, what exactly is my 30. Now
Mm.
you know what you're doing with your with your finances. If you're spending more on your entertainment, because I know that the first thing you will cancel is your insurance, but you can
Yes.
still go out. You know, you can still eat out, you can still buy KFC, you can still spoil yourself, you know, because you feel like you work hard and you deserve that. But now it's time to be realistic when you're with your plan, to say, look,
Mm.
I spend about 60% on my basic needs.
Yeah.
It means that uh, I have to reduce from my 30% of the lifestyle and entertainment,
Yeah.
so that I can cover on the 60%, you know, like the 50%, I need to add a little bit more on that. And
Mm.
then maybe for this time, my 30%, which is my lifestyle and entertainment, will have to suffer while I still look after this until you get back on track. The minute you get back on track, now you are able to monitor your spending. So the most important thing here is to go back to your drawing board, go back
Yeah.
to your budgeting, you know, and then when you start knowing how much you're spending on what, and
Mm.
then you will know which one you'll have to cut down. Because yes, we might be running very thin on our income because we're paying off a lot of things.
Yeah.
But now you need to sit down and be realistic with your situation, and then you start moving from there.
Be realistic. Be honest with your situation
With yourself, yes.
yourself. Hmm. All right. So we have our viewers that are connected on Riverside, and we want to welcome you there. So, what you can do, if you have any question or comment, you can type it through there, and then our guest will be able to read and answer your question. We also have those that are connected on Telegram. You can raise your hand. There's a button there. You click on it, raise your hand, and then you'll be able to ask the question live on the show to our guest. If you have any comments as well, you're more than welcome to share it with us. So, Figile,
Mhm,
let's speak
mhm,
about
yes.
investments and retirement stories here.
Mhm.
I need you to
Yeah,
simplify this concept: investing in retirement. Where should people begin?
the best place to begin is with
Mm.
clarity, not with complexity. You know, you start
Yeah.
by knowing your goal. What is it that I want to do? You know,
Mm.
if you want to invest, why am I investing? What am I investing for? Is it for retirement? Is it for buying a home? Is it for my children's education? Once you understand the purpose and the timeline, everything else becomes more easier. Obviously, you still have to have me to guide you on that, but at least I will ask you the very same thing. Why do you want to invest? You know, what is it that you want to invest towards? Then for how much time do we have? And then I will assist you with proposing what will best suit your situation at that time. And
Yeah.
then the next thing is that you need to make sure that the basics are in place. You cannot start investing, or say you want to have an emergency fund. You cannot start investing or saving towards that emergency fund if you have cancelled your insurance. It doesn't make sense.
Yeah.
Whether it's a short-term insurance, whether it's a life insurance, whether it's a whatever medical insurance, you cannot do that. Or say I will not advise you to do that. Reason being, if you've got those risks open, and you start by saying, I want to invest. When one of the things, say a giza burst,
Mm.
you canceled your short-term insurance, you'll have to erode your emergency fund that you have saved to cover only for that. So you're working backwards instead of working forward. That's why an insurance becomes an investment. It becomes a necessity. It forms the basic the needs. Then you can now look at the investment for whatever goals that you have. And then for the retirement, you need to begin with being consistent in terms of your contributions. Even if you start small, whether you start with a 200 rand or a 500 rand, it's better to start, before
Right.
yes. And one thing that works for you, especially when it comes to retirement, is the time in the market. When you start, when you're still young, you're fresh from varsity. I know that most of the young ones, they don't look at it because they feel like, ah, no, retirement, it's when I turn 55 or 65. You don't
Mm,
have to plan for retirement when or you already reached the retirement. You have to start
mm.
planning today. And the time in the market with that small contribution will help you build your retirement fund.
Figile, I wish we were taught this, back in schools,
Yes.
because really now we're talking to, you know, our audience is people that are working already,
Mhm,
and they're not coming out from school. I guess those that are coming out from school, they're on TikTok, or on social
mhm,
media, just watching videos and all of that, not listening to
mhm,
this
mhm,
type of content. and
mhm,
and you find that a lot more people who are searching for content like this one are the ones who are actually in the mess, the quagmire,
mhm,
and
mhm.
they're trying to come out of it. So yeah, I wish we had this, back from school. We do have a
Yeah.
comment on Riverside.
Mhm.
Maybe we
Yes.
can retain that from
Mhm.
Mpo. He says, or she says, I wish I can be strict with my savings, but I don't know how. That's exactly what I'm saying. See, I'm not alone in this. Mpo, you're not
Paul,
alone
to
in this.
answer you, you are not alone.
Yeah.
Like I said, you need to have somebody who will hold you accountable.
Mm,
The fact that you start and you fall off with whatever you have started, it's because there's nobody who'll hold you accountable. If you get somebody who'll hold you accountable, not that you'll be scared of that person, but you know that you'll have to explain why did you stop with your savings, what's the
mm,
reason, because our agreement was that you wanted to save towards this specific goal, but it didn't happen. This is what's happening. And then you can be able to get back on the wagon should you have somebody that will hold you accountable. The challenge that we have is that I want to put it away by myself and using vehicles that are only known by me,
mm,
not the ones that are known by an expert. That's
mm.
where the problem comes in. But it's not really a train smash. We are happy that you have joined us today. Now you will contact me after this and I'll hold you accountable.
Yeah, Paul's office here.
Yeah.
Figure, okay,
Yes.
so if I want to start saving, or start investing,
Mhm,
and I'm already running little on my salary, my salary is very thin. Where
mhm.
do I start?
Okay. With very little money,
Mm,
if you put in place what we have discussed previously,
yeah.
what I will recommend is that you need to consult with the financial planner or advisor so that they
Okay.
see that do you need to invest or
Mm,
do we need to channel your money somewhere else so that we at least stretch your income. Then you can be able to start investing. Without a consultation you cannot say, okay, here is where you have to start, especially when you're already running, you overstretched, or when it comes to your finances. But if you've got that little, on your investment, we've
mm,
taken care of the other things. Now you're saying, I've got this 20%, which is 200 rand that I want to save on a monthly basis. You
mm.
can start because you're starting small, but what's important on that is to be consistent. Even with that small amount of money, it will make a difference over time. And the habit is what matters more than the amount that you start with. That's the first thing that you can do when you want to start investing with the little that you have. And again, you need to use accessible investment options, but you won't know the accessible investment options without consulting with a financial planner or an advisor to show you that, okay, what are your goals? What are your needs? Why do you need investing? And they will show you the good investment vehicles that you can use with whatever you need to invest towards. And another thing that I will say, even though it comes is the first thing that you will cancel on that debit order, is to make it automatic. If you say, okay, I will have to transfer money from this account to my savings account for whatever I want to do. Sometimes you will find that the money finishes before you can make that transfer. But if you're making it automatic in the form of a debit order, already the first thing that goes off on your month, in the beginning of the month or on the end of the month, is that debit order that you have set up. That will force you to be disciplined when it comes to making the contributions on a monthly basis. And another thing, you need to focus on your long-term goals. What are your long-term goals, especially when it comes to retirement? The consistency and the time in the market are far more important than trying to pick a perfect investment. And with the income growing, because we know that, I don't know, but I do believe that on a yearly basis, people who are working, they get increases at work. When that increase comes in, you should be looking at reviewing your contributions and increasing your investments when it comes to that. So the biggest mistake that we often make is that we want to wait until we earn more. That's one thing that you don't need to do. You'd rather put away that 100 rand than waiting until you've got 1,000 rand to put away, or that 10,000 rand to invest. But when you start early and you stay committed, then you can be able to succeed.
Very essential, right?
Yes,
Okay.
very.
So you've given us how to start, right? And thank you for that. I
Yes.
really appreciate it. But the other thing is that I would like to find out. Uh, yes, we spoke about the insurance, and I don't know why I'm hopping back to it.
Mhm,
The insurance that we keep on canceling whenever we're running short. But
mhm.
if I may ask, what types of insurances that I need to consider, or we need to consider, and these are insurances are essential. We need to have them, like it or not.
Mhm. Before I give you the type of essential insurance that
Mm,
one needs to have, one thing that most of the time I find it happening is that people are canceling because they say, I do not want to make whoever rich when I'm no longer there. I don't want to make my kids rich. I struggled when I grew up. They need to struggle as well. Insurance is not to make other people rich. It keeps you financially stable when life happens. So we're not saying that life is going to happen. Apart from death, we know that we're going to die. But there are certain things that we need to look at as to, okay, should this happen? Will I be able to survive financially? And that's when the essential types of insurance comes in. There's an income. Most people don't believe that they have to insure their income. But if it's your asset, actually, when you've got an income, that's your asset because it's money that's feeding your family. But if you don't protect it and life happens, you are not able to work. Maybe it can be due to illness or to an injury. What's going to happen to your family? Because
mm,
you are earning an income, now you are no longer earning an income, which makes it very important to protect when it comes to protecting your assets. And you've got family, you've got wife, you've got kids that you're taking care of. Maybe you've got extended family that are really dependent on you. You are using your income to support them. Should you say something happens to you, life happens, and you pass on, Who's going to
Mm.
take care of your family? Who's going to take care of the things that you're taking care of? You could be paying a bond, and you could be taking your kids to school, or they're still young. They will need to go to school at a later age. What, where will they get the money, because you are no longer there? So for you to protect your family, you need to have something in place that will look at that. And then disability. We're driving cars,
Yeah.
and before, when you're going to buy a car, the dealership says you are not going to take this car out of the dealership without an insurance. But how many people think that if I have to insure this car, the chances of this car being involved in an accident with me in it are 99.999 or 100%? I'm insuring the car. Am I insured should that life happens? If the car will be paid off and I become disabled, what's going to happen with me? So those are the things we don't look at. So with the essential types of insurance, is protecting your income, is looking making sure that should life happens and you become disabled, you do have something that's going to provide you an income, will provide you money to make those adjustments. Say you are in a wheelchair and you're staying in a house that uses staircases. You know that you will be able to have a ramp in your house, renovating your house to suit your current need at that stage. And your life insurance is very important to take care of your family members should anything happen to you. So I look at those as the most important ones. But even short-term insurance, we spoke about a geyser bursting. If you don't have a short-term insurance to look after that, it means that you'll have to take it out of pocket. There's still your TV in the house. You will have to either stay without the TV, or you need to buy a new TV, and you
You
have
can
to take it
no.
out of pocket. you know so there's a lot. So that short-term
Mm.
insurance is very important as well. And medical insurance, we if it happens that you need to be taken into a hospital, who's going to cover those bills? Yes, you can go to the government hospital, and what are the chances for you to get a proper care, because of the number of people that are queuing there? You'll find that you queuing with somebody who suffered stroke, and people believe that I've got medical aid. Medical aid doesn't cover for everything that the hospital charges. And
Hmm.
if medical aid says, I'm not going to pay for this, you have to pay it out of pocket. But if you've had a proper plan to look at what you have and what you need should life happen, and you balance that, then you are safe.
Sure. Feel I don't know what's happening to this time, but yo, it's ebbing away from us, eh?
Yeah. Now's
Yo,
the
yeah,
time.
yeah, yeah, yeah. So
All the
maybe
time.
let's quickly jump into estate planning. Estate.
Mhm.
Um, it sounds intimidating. Even just the word estate. You're thinking about. I don't know if you've watched the movie Dynasty. The house that
Oh, yes,
they
yes.
revealing our age there.
Yes.
Maybe it's not what this means, but can you break
Yeah.
it down simply for us there?
In a simple way, not in a scary way,
Mm.
estate planning is simply about deciding what happens to your money that you are working hard to, or things that you are working towards. You bought a house, you've got a car, you've got children. So it helps you decide while you're still alive as to what will happen to my money, what will happen to my loved ones. You may have kids. What's going to happen to my kids if I'm no longer around? So it's not about looking at death, but it's about taking care of having clarity and protection for your family members or for your loved ones.
So does estate go hand in hand with having a will?
Definitely.
Okay.
Having a will, you're just drafting as to this is what's going to happen.
Mm,
But having an estate planned, you're looking at things like the liquidity of your estate. In my in my everyday life, you find people being shocked that when you're dead,
mm,
the costs of you passing. Now, if you have an estate plan in place, you know how to protect the estate. You don't want to pay for things that you could have avoided paying, like executor's fees. You don't want to pay too much towards the executor. But if you structure your estate correctly, you can avoid those things. So that's why the estate planning part is very important, and it determines the liquidity and the cost based on your estate, based on whatever you have. Because when you say estate, people are thinking wealthy. So
mm,
it's like I said, financial planning is not only for the wealthy, it's for
mm.
everyone. With the little that you have, you need to structure it in a way that will benefit your loved ones when you are no longer
Sure. Thank you. Before we wrap this up, Fikile,
there. Mhm.
um, maybe we can ask you for just one piece of financial advice that you believe that every one of us, should live by, especially in these times of the economy that is plunging and skyrocketing. It's everywhere. So, what
Mhm.
advice would you give us?
I wouldn't give you advice because this is for information purposes.
Okay, okay,
It's
right.
not advice. So you don't have to take
What
whatever word we
information can you give us to take away from this?
but if I can leave the listeners with one thought,
Yeah,
it's this: that your
yeah.
financial future is not decided by how much you earn, but by the choices that you make consistently. You don't need to be perfect. You just need to be intentional with whatever you're planning. The small steps that you take today compound into a big results over time. So you start where you are, you stay disciplined, you remember that taking control of your money is really about taking control of your life. And I mean, one thing I will say is that to the listeners out there, if you don't know where and how to start, I
Mm.
am here to offer you that. Um, it is a service, but yeah, I am here for you. You are welcome to
Thank you,
contact me
Figile, our financial planner. Thank you so much for being there for us. Exactly the time that we need somebody like yourself to help us navigate these streets. And we also want to thank those who have connected on Telegram, on YouTube, also here on Riverside. Thank you for being part of the show, making this very successful. And we're looking forward to hearing more of your comments and your thoughts when we post this video on YouTube at the later stage. So back to you, Figile. We want to thank you
yes.
for sharing such valuable insights with us today. And to our viewers, managing money doesn't have to be overwhelming, as we have heard from our expert here. So, what we need to do is we need to start small, we need to stay consistent, and also need to take control of our financial future. So, once more, thank you so much for joining us this evening. And thank you, Figile. We hope that you can come back maybe as co host again. We don't know. Yeah.
Yes,
Wow.
I'll pray about coming back as a co-host.
I think we have a comment before we close up there. Bro
Yes.
Mike, you can unmute yourself there. Welcome to NNP Talk Show.
Hi, Nell. How are you? Hi, Auspigile.
Yes. Hey,
Hello.
Hilda.
Yes. This just a suggestion. The way we are struggling financially as people, maybe now once in 2 months, 3 months, if we can have somebody like Figile to come and speak to us about the finances. I must say the topic was very interesting, and I've learned a lot from it. Thank
That's a
Thank
you.
good
you.
That's a good suggestion. Thank you.
Now,
We'll
now,
keep
now
that
you
in
told me
consideration.
to visit you in the following month.
Exactly, exactly. This is how we're calling you back. But
Okay then.
all right, but
Yes,
thank you so
yes.
much everyone
Thank you
for,
very
joining
much.
us. And my name is Neo Morapedi, and I'm your host. And we're signing out.
Thank you.